Welcome to the Daily Brief, where we'll go over the highlights in the market for Thursday, September 15th, and then we'll see how things look for Friday, September 16th. And I did do a full-length video where I'll show all the charts. So in this chart, I'm just going to be going through the bullet points that I have in the PowerPoint slides. So let's go back and talk about what happened here. At the open, we had a slightly lower open, and then there was an attempt to take prices higher. Well, that didn't last very long, but the S&P was positive briefly. Then when we couldn't really take things much higher, prices fell below the daily pivot at 39.40 and then fell below S1 at 39.20. We saw some buying coming in, but it hit resistance when it came back up to the daily pivot level and then fell all the way down to S2 at 38.90, which is below 3900, which is a critical level right now. Going into the close, we did see some buying that took prices right back up to 3,900. We're actually at 3,901 currently. We still ended up being down 1.13%. Volume was above average, so we've been seeing a pickup in that. The technicals, yeah, they're decidedly negative, but they're also suggesting that we may be oversold on a short-term basis. We're also at pretty critical support at 3,900. Usually this would be a psychological level, but it's also now turned into at least a short-term technical level. So we want to watch what's going to happen at this 3,900 level. And this is because of inflation and interest rates right now. So what are some comments? There was a national railroad strike that was kind of threatening to happen. It looks as though that has been averted, and that really kind of helps things, because you think we're having supply chain issues now. Just think what life would be like if our railroad system ended up going on strike. My goodness, that could have been a real mess. And I understand at the time I record this, it's not official. It's not official that it's been averted, but it's looking like it will be. The S&P did break below that trend line. In the brief video that I posted yesterday, that's right about where we were at. Well, we went down below that, and we're at this other tipping point at 3,900. Will we get a bounce from this? Are we short-term oversold right now? Those are the questions that we're asking. We have another yield curve that's back at the party, the 30 to the 5-year, in addition to the 10 to the 2 and the 10 to the 5. We're still watching that 10 to the 3-month, which has yet to go inverted. Sentiment is still tipping over a little bit towards the fearful side, but not necessarily extreme. We had a whole slew of different economic reports. The big one, the one that I was focused on, was retail sales. Ended up being up 0.3%. They expected it to be unchanged. If you take out autos, it was down 0.3%, and they expected that to be unchanged. Jobless claims are still coming in better than expected, lower unemployment claims. That's kind of adding to the scenario that the employment situation is holding up. In the New York area, the Empire State Manufacturing came in at minus 1.5. They expected it to be down a lot more at minus 13.5. Philadelphia, it came in weaker than expected at minus 9.9, where they had expected it to be up 3. Import prices were down 1%. Last time we had this report, they were down 1.5%. If you take out oil, they were down 0.2%, where last time they were down 0.5%. Export prices were down 0.016. Last time, down 0.37. So this was a little less than expected. If you take out agriculture, also less than expected at minus 0.18, where the last time it was down 0.38. Industrial production was a little weaker than expected. They expected it to be unchanged, and it came in at 0.002. And capacity utilization was also a little weaker than expected at 0.803. Our trend is negative, but we're still below that 20 line now. Our bias is you can't really go anywhere else other than negative. And now with the last number of days, even though we had a bit of a bounce on Wednesday, we still have to go with negative overall. So what's our outlook? We're negative. My gosh. We have consumer sentiment coming out. This will be the preliminary reading, and that's really the major report coming out on Friday. The whole list of geopolitical events, and for right now, it's inflation and interest rates. But as I always say, we need to be aware of these other things in this list, because those could always come to the forefront. So our scenarios, we could go with a down scenario. if you're a little more aggressive with the ADX and thinking that we may drop below 3,900 because of all the headwinds that we're seeing right now, and the technicals are definitely negative. You can't really make a positive stance at all because of the technicals. Our scenarios, our rotation, our setups, those are all weakening, so they're on hold again. We've lost pretty much all the moving averages that we had gained just a week ago. And you could go sideways because the ADX is below 20 and it is negative. So our conclusion, it's not hard, negative across the board right now. So if you want to see the charts and more of an in-depth explanation and commentary and just looking at different things, please watch the full-length video. And I will prepare the daily video over the weekend for Monday, as well as the weekly and intermarket analysis video.